Supermicrocomputers stock surged more than 17% following its Q3 2026 earnings report. The company reported non-GAAP earnings per share of 84 cents, well above the expected 63 cents. That's a 33% beat, which is a strong showing. But the story isn't just about the earnings, it's also about what the numbers mean for the company's future. Revenue came in at $10.24 billion, a 122.7% increase compared to the same period last year. That's impressive growth, but it still missed the $12.39 billion Wall Street was expecting, so while the company is growing fast, it's not keeping up with investor expectations. Gross profit margins improved to 10.1%, up from the previous quarter's 6.4%. That's a meaningful rebound, and it suggests some improvements in cost control or product mix. But the company's guidance for the next quarter suggests those margins will fall back toward 8.2% to 8.4%, which is a step down from what was just reported. That could signal pressure on profitability in the near term. Operating cash flow turned. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Sharply negative at $6.6 billion, and net debt climbed to $7.5 billion. That's a red flag for investors who are watching for signs of financial strain. The company's market cap now stands at $20.12 billion, with the stock trading at $33.46. Analysts have given the stock a hold rating, with an average price target of $38.43. That suggests a cautious outlook, even after the earnings beat. The legal and compliance issues that have been lingering in the background are still a concern. They may not have directly impacted the earnings report, but they could affect investor sentiment and future performance. So what's the takeaway? The stock's sharp rise is driven by a strong earnings beat, but the underlying financials tell a more complicated story. The revenue miss and cash flow issues suggest that the company's growth is not yet translating into consistent profitability or strong balance sheet health. Investors are likely asking whether this is a turning point or if the stock is just on a temporary upswing. The next signal to watch is the company's Q4 guidance and how it performs in the coming quarters. If the gross margin improvements are sustained and cash flow stabilizes, the stock could continue to climb. But if the financial pressures persist, the market may reassess its current valuation. Until then, the stock remains in a position of mixed signals, upward momentum from earnings, but uncertainty from operational and financial challenges. The earnings beat has given investors a moment of optimism, but the broader financial picture. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Is still under scrutiny. The company's ability to maintain profitability and manage its debt will be key factors in determining whether this rally is sustainable. With the stock trading at $33.46, the market is clearly reacting to the earnings beat, but the cautious, hold rating from analysts suggests that the broader picture remains uncertain. The next few quarters will be critical in determining whether Supermicrocomputer can turn this momentum into lasting success, or if the market is simply reacting to a short-term bounce.